Hello, and welcome to episode number 16 of Zach's Tech Talk Tuesday. My name is Ryan McQueeney, and on this week's show, we'll be discussing the recent momentum of Fitbit, a once heralded wearable tech company that is showing signs of being back on track. I know we're taking a time capsule back to 2015 when Fitbit and its incredibly popular IPO were dominating headlines for months. Of course, investors that have followed the company will know that the glory days, the mid 2015 glory days, that post IPO honeymoon period has, it's long gone. I will say this though, Fitbit shares have bounced more than 15% over the past 12 weeks, making the stock one of the more compelling stories in the consumer electronics space. But as I mentioned, at about $6.50 per share, Fitbit is still a long way off its 52-week high of $14.27, and that mid-40s range it hit shortly after its IPO in 2015 seems like a distant memory. Simply put, in my opinion, the Fitbit IPO and kind of the coming up, the come up for the company was just unfortunately poorly timed. If you look at kind of some industry trends, you kind of saw the rise of the Apple Watch, which we'll talk about the latest Apple Watch a little bit later in this show. But you also kind of saw the floor or the rug kind of get pulled out from under wearable tech as an emerging trend. I think over time you've seen the buzz of the wearable tech kind of emergence wear off, and that was kind of right, that kind of cool down period was lined up very close with Fitbit's IPO, unfortunately. Still, we're starting to see some sort of a rebound from Fitbit, and it's interesting to note what the company has been doing in an effort to spark a recovery. We're going to be talking about a few things that have helped Fitbit gain some momentum, but I want to point out right now that all of these things have to do with a continued focus on advancing medical technology, an avenue that will be essential for Fitbit as time goes on. This idea that wearable tech could be beneficial for one's own health and as a promotion of health tracking and overall fitness and well-being is something that has really followed wearable tech in its history. I mean, it's always clearly been an option for the industry, is a focus for the industry, and Fitbit is really poised to benefit from that as the industry or as the market for wearable tech shifts even further towards fitness and medical technology. So first, we're going to start with the Ionic, which is Fitbit's first ever smartwatch. The Ionic was revealed in late August and was met with a relatively warm reception from the wearable tech crowd. This features Fitbit's signature fitness tracking capabilities, of course, and then some new contactless payment and music pairing options. You can pair your smartphone with the watch in order to receive notifications for calls and texts. And you can get alerts for apps like Facebook, Instagram, Snapchat, things like that. It's really, what you've come to expect from a smartwatch these days. On the more medical focused side, though, the Ionic also features improved heart rate tracking, which includes tracking a user's heart rate zones and resting heart rate in real time around the clock. The smartwatch also offers access to personalized and adaptable workouts, and it's also water resistant up to 50 meters, which gives the user the ability to track their swims. And at $299.95, all of these features make the Ionic a viable smartwatch option, especially with its improvements to fitness and health tracking. Like I said, it was met with a relatively warm reception, but I think the reception got warmer over the next couple of weeks, especially as a key competitor unveiled their latest smartwatch a few weeks later. Indeed, we actually saw a direct bounce in Fitbit shares in the direct wake of Apple's announcement of the Apple Watch Series 3, mostly because the Series 3 followed Fitbit's lead and put the emphasis on fitness and health. Like Fitbit, it boasted a redesigned workout app, as well as new features for swimmers and gym goers. It tracks stairs climbed. The Series 3 also has new heart rate tracking on the home screen, including that resting heart rate and recovery heart rate. It also has a cool little feature where it can notify a user if their heart rate is elevated when they don't appear to be active. All of these features go to show that the wearable tech industry is headed to a more health-centric focus. Plus, the Series 3 starts at nearly $100 more than the Fitbit Ionic, making Fitbit's smartwatch the value option there, especially if you're not already tied to an Apple device. Even more recently, we saw more signs that Fitbit was looking to head in a health-focused direction. A few weeks ago, shares popped on the back of the news that Fitbit, along with rival Apple and several other companies, had been chosen to participate in a new FDA program. According to the agency, this group is going to pilot a quote-unquote digital health software pre-certification study, which is essentially focusing on trying to figure out a faster process for approving medical software and medical technology. So there is a further sign that not only is the industry from the production and consumer side of things heading in this more health-focused direction, we're also seeing a sign that from a regulatory perspective, we are getting improvements on that, and regulators are seeing the benefits of medical technology and realizing that we need to have a streamlined process for approving medical fitness-related software. So this program specifically, this pilot program, was definitely interpreted as good news for Fitbit, which, again, should just continue to stand to benefit from further legitimization of its own technology and, as well as that more efficient regulatory process I was just talking about. As of right now, obviously we're headed into earnings season. Fitbit is a Zacks ranked number 2 buy. The company is slated to report its latest quarterly results on November 1st, and fortunately, investors should definitely expect some tough year-over-year comparisons this quarter. Really, this fiscal year has been a tough year as when we're talking about growth comparisons, earnings and sales slumping significantly. However, as we know, this once hyped stock has not shaken out quite like its IPO investors had hoped, and near-term challenges are still present. Obviously, as much as I'm touching on these good things, these new initiatives, the Ionic, the overall shift of the industry into something that Fitbit really knows and does well. These near-term challenges are still there, but based on this direction of the industry and Fitbit's own expertise, the company really should remain a challenger for years to come. Kind of in summation here, I guess my overall point is I don't necessarily think Fitbit is back per se, and it's the near-term challenges to me as an investor would present a volatility that is a little bit risky, to the point that I would think avoiding it is certainly a reasonable option. However, this is not a company that's going to go away anytime soon, and we should be talking about the Ionic 3 here down the line in a few years. I mean, I think that the smartwatch line is really going to be a flagship product for the company, and I think the overall shift of wearable tech to a health-centric focus will benefit them. That does it for this episode, guys. As a reminder, if you feel that we missed something, or if you want us to cover a different story, shoot us an email at podcast@zacks.com. Make sure to check out all of our other audio content at zacks.com/podcasts. And remember to subscribe and leave us a rating on iTunes. As always, thanks for listening to the Zacks Tech Talk Tuesday. We will see you next time.